Assalamu alaikum, dear students of grade 10. I'm going to explain you about accounting books. This is Ilham sir from Benhill College, Gampola. So you have to study about accounting books for your grade 10 class with the O-level syllabus. So let me summarize about the accounting books. Uh, okay. So what are these accounting books? What do you mean by accounting books? First of all, you see what is accounting books. You don't have a topic. You don't have a heading in your textbook saying accounting books. So you might have studied about prime entry books and cash book, sales journal, or account, sales account, purchase account. So all these I'm going to put in order. Right? I'm going to put this in order and teach you under the heading of accounting books. Right. So in accounting, we record transactions to provide useful information to the stakeholders, which is the objective of accounting. We have to record the transactions. We must record the transactions. Okay, so that is an important step in accounting, recording transactions. Right. So where do we record transactions? In accounting books. Record transactions in accounting books. So when transactions happen, then and there, we don't record in accounting books. When transactions happen, then and there, immediately we record in source documents. So let us learn about source documents in another class. So I would say source documents are used to record transactions when they happen, or source documents are used to collect transactions, to gather the transactions, to record in accounting books. So we record transactions in accounting books from source documents. Got it? So this should. So what the main topic here is record and transaction is the main topic. So under that, I'm going to summarize and explain you about what accounting books. So to record transactions, we use mainly two types of accounting books. As I told you earlier, you might have studied sales journal, purchase journal, sales account, motor vehicle account, electricity account. So I'm going to explain that in detail. So we have two types of books to record transactions. Okay. One is called the prime entry books. One is called the prime entry books. Okay. Right. So that is called prime entry books. Right. Now you all know what is this. Prime. You all heard about prime entry books. Right. What is the other one? Other book. We have two types of accounting books. The other one is ledger books. Ledger. So you might have heard these words, ledger or ledgers. So in accounting, to record transactions, we have mainly two types of books. So we call them as accounting books. Right. Before we go to details of prime entry books, let me explain you what is the difference between the prime entry books and ledger books. For your syllabus, actually speaking, it should be the ledger book. We have only one book as ledger. So sometimes we call it ledger. So I just want to emphasize that it's a book. We used to record transaction. Right. So now, what is a prime entry book? So what are prime entry books? To answer this question, we have to say prime entry books are type of accounting books where we use to record transactions. where we used to record transactions from source documents. From source documents. So a little while ago, I told you source documents are used to record transactions when they happen, then and there. From source documents, we record transactions in prime entry books, usually end of the day. End of the day. So therefore, sometimes prime entry books are called day books. Day books, right? Then from prime entry books, so I'm going to, you all know the prime entry books. Anyway, I will be explaining about the prime entry books. What are the prime entry books? So from the prime entry books, transactions are recorded in the ledger book. The ledger book. So according to your syllabus, I would say ledger book, not books. Right. So you can say ledger book. So big book. So when it comes to prime entry books, according to your syllabus, you may notice here there are 6 prime entry books because there are 6 rows in this table here. But when it comes to ledger book, there is only one book. Right. So that is the difference between one of the difference between prime entry books and ledger books. Prime entry books are used to record transactions from source documents. We don't record transactions from source documents directly in the ledger book. So when do we record transactions in the ledger book? Just imagine some CR books, right? So ledger book is a big book, a big CR book. Whereas there are 6 CR books, we call them all together as prime entry books. So just imagine in a business, one person is in charge, assigned the duty to record transactions in prime entry books. So he will do that every day. If another person is appointed to record transactions in the ledger book, he will do it end of the month. This is for manual accounting. This is how we teach for you to easily understand. That is why you might have studied at school. Prime entry books are usually totaled or balanced end of the month. End of the month. So usually we record transactions in the prime entry books for a month and total. For example, sales journal is totaled end of the month. We don't say sales journal is balanced. I'll come to that balanced later. Usually the cash book is balanced end of the month. Why? Because we have to record transactions from cash book, from sales journal, from purchase journal in the ledger end of the month. That is why I'm saying you record transactions in the ledger book end of the month. That is the key difference, one of the main difference. Then the other thing is between prime entry books and ledger, generally speaking, you might have studied about accounts. Now you have heard sales account, capital account, bank account. So these are what an account. Now this is an account. This is an account. I'm going to show you an account. How do we draw an account? Right. This is an account. Yeah, I'll show like this. It's an account, a T. Right? It looks like the capital letter T. So we call it T accounts. So you remember we draw accounts in the book of ledger. In this book only we draw ledger accounts like this. Since we draw the accounts in the book of ledger, we call it ledger account or T account because the main structure of this account looks like the capital letter T. So we call it T account, right? So in other words, when do we record transactions? When? Note. When do we record transactions in the accounts? End of the month. End of the month. For example, if you take the sales account, we may discuss in the future classes, future videos. So, for example, you record one of the transactions. You record in one of the prime entry book. It's called the sales journal. The sales journal is a prime entry book where we use record selling goods on credit. 3 points to note. Selling goods on credit. So we record daily credit sales or whenever it happens. End of the day, we record in the sales journal and total it end of the month. So we'll say during a particular month, we have sold goods on credit 10 times, 10 times, not every day, maybe. So the total credit sales of the month is total in the sales journal. If you all have studied, you can remember. The total credit sales is entered in the sales account on this side, like this. So that is what I told you. We record transactions in accounts end of the month. But you learn as if you are recording every day. Because in the exam, or you may have studied, your teacher might have given you some transactions and ask you to record straight away in the ledger, straight away in accounts. That is for learning purpose. But practically, nobody records transactions in accounts daily or immediately when transactions happen. I'm talking about manual accounting. Right. So that is what another difference between what prime entry books and ledger books. So we record transactions in the ledger books in accounts. To record transactions in accounts, we have to apply a rule in accounting. There is accounting principle to record transaction in the ledger. Without learning the rules, you can't record transactions in the ledger accounts, in the book of ledger. That is called the double entry rule or double entry principle. So when recording transactions in the ledger book, we have to follow the double entry rules. So let us talk about double entry rules later. So my purpose of this video is to explain you about the two types of accounting books mainly. Got it? Right. So that is the difference between prime entry books and ledger. Both are accounting books. We record transactions daily for learning purpose. In prime entry books, end of the month, we record in ledger book. In the ledger book only, we have to apply the double entry principle. And in the ledger book only, we have to draw accounts. So when I'm saying when you have to draw accounts only in the ledger, I know that you have a doubt now. I know that you have a big doubt. What's the doubt? We have studied the cash book or cash account sales. Sorry, cash book as a prime entry book. Right. Petty cash book. And bank account. Now, these three prime entry books are, and I come to these prime entry books, assuming that you know a little about prime entry books, at least the names I'm explaining, are also considered as accounts. But we don't draw those prime entry books in the book of ledger because the cash book you have drawn in the cash book, the book is also considered as an account, cash account. Sometimes cash book is called cash account. We don't draw a cash account in the ledger. I told you all the accounts are drawn in the ledger, but we don't draw a cash account in the ledger because the cash book is considered as a what? Not only prime entry book, but also as an account. Therefore, we say these three prime entry books, out of these three prime entry books you learn for your level, three of them are not only prime entry books, they play the dual role in accounting. Double acting. The same film, Same person is acting as the father sometimes, also as the son. Double acting. Same person. The same cash book is considered as a prime entry book as well as an account. So that is about that. So let me quickly go to this prime entry book, since most of you all might know the prime entry books. So let us see what are the 6 prime entry books. Remember, there are how many prime entry books for your syllabus? 6 prime entry books. 6. You can easily remember like this: cash book, petty cash book. Maybe you have studied in a different order, but for you to easily remember, cash book, petty cash book. Again, the cash book words here. Then you can remember 3 journals. 3 journals: sales journal, purchase journal, general journal. So 3 plus 2. And the last one is bank account. So according to your syllabus, according to your book, your grade 10 book. So this is how they have classified the prime entry books. So which is not a very good way of classifying according to modern accounting concepts. Anyway, we have to stick to what they have given you in the book. Right. Got it? So now we'll ask a question. If you asked a question, what is a cash book? Then how do you answer? What is a petty cash book? What is a sales journal? All the accounting terms, books or accounting terms, you must learn what is. What is. So how do you describe cash book? You have to say of all these, not only a cash book, you have to say it is a prime entry book. It is a prime entry used to record transactions. Prime entry books are used to record transactions. Both the accounting books are used to record. So cash book is a prime entry book used to record transactions. Then you must try, because there are many types of prime entry books, then you must try to describe the transaction. Because we don't record all the transactions in one single prime entry book. Some students think, oh, the transaction we must record in cash book. Oh, that is wrong. What you record in cash book, you can't record in sales journal. What you record in sales journal, you can't record in any other prime entry books. Therefore, you have to clearly know which transaction is recorded in which prime entry book. Right. So how do you describe the transaction that you record in cash? Very simple. You can say like this. In the cash book, we record cash transactions. Very easy. The cash book, we record what cash transactions. Generally, we record cash transactions. What do you mean by cash transaction? Transactions which either increase or decrease cash in your business. When it comes to cash in your business, the notes and coins, the money that you have in the form of notes and coins, 1,000 rupees, 100 rupees. Normally, you keep it in the drawer or in the locker or in the safe. So cash drawer. So if the money in the drawer increase due to a transaction, that transaction you must record in cash or decrease. So there are for your studies, let me say like this, around 10 transactions, 10 cash transactions. You have to learn 10 different types of cash transactions. Let me give an example. Owner's investment by cash. Owner's investing capital by cash. Owner's investment. Owner brings money to the business. Is the cash transaction. Selling goods for cash, or we call it cash sales. Cash sales. Another one. Obtaining loans. Usually businesses obtain loan from the bank. So bank loan obtain cash transaction. Which increase cash. So I have given 3. Then receiving other income. Receiving other income. Receiving rent. Receiving interest. So you get this in money. So if you get that in cash, that is another transaction in accounting. Then we have receiving money from debtors after selling goods on credit. After selling goods on credit, when the debtor pays us, the customer pays us, we call it received from debtors. That is another type of transaction, another cash transaction, which increase cash. I think I have given you now 5. There's one more, which is very unlikely for your exam. Selling non-current assets. Selling a non-current asset. When you sell your machine, old machine, after using for some time, non-current assets are those things that we bought with the intention of using and use it for a long time. So when you get when those assets get old, when the machine get old, we bought a computer, we used it for 3 years. Now it has become obsolete or can't use it. Is not according to the latest softwares that we can't use. So we want to sell that. So you sell the computer, and what you get from the sale, the money. We don't say cash sales, or we call it cash sales. Is only for selling goods, the selling of non-current assets. So there are 6 transactions likewise to increase cash. Also, for these 6 transactions, we can discuss the opposite, which decrease cash. So, example, cash drawings for the owner's investment, opposite, obtaining loan, repayment of loan, cash sales, cash purchase, receiving money from debtors, received from debtors, payments to creditors, all cash decrease and increase likewise. You can remember 12 transactions. You may have to study altogether maximum around 35 transactions for your entire exam. So you cover around 13, say 14 transactions. So in the cash book alone, we record 14 transactions. Out of them, 12 are cash transactions, so either which increase or decrease cash. So let me discuss later about the cash in another video. Then we have petty cash book. So that is another prime entry book we use to record transactions. What transactions we record? Petty cash. So I have to explain what are petty cash transactions. So one by one explanation is not the important, not what I meant to do in this video. I just explain about cash book. Likewise, there are different types of transactions we have used where you have to have different types of primary. For example, at school, you have different subjects, right? You have different subjects. You don't use the same book to write notes for all the subjects. For maths, you have a different book. For science, you have a different book. So what will happen if you write all the notes in one book? It will be jumbled and it will be very, very difficult for you to refer and study, right? So likewise, we have different types of prime entry books to record transactions daily. And for according to your syllabus, these are the prime entry books. And the ledger book, when it comes to ledger book, I told you for our in O level, we have only one ledger book. So otherwise, we have to say ledger books. And that ledger book is called the general ledger. General ledger. We call it general ledger. We call it general ledger. Or we call it nominal ledger. Nominal ledger is also. So actually speaking, ledger books are further classified into 2 that is not in your syllabus. So one of that is general ledger, right? So that is fine. Because you don't have the other type of ledger book for your studies. So we call it general or nominal ledger. So this is what is all about, types of accounting books. If you are interested, I will be uploading more videos on details of what are the transactions. How do we record transactions in the prime entry books? How do you record in the ledger? So I already explained you how do you record transactions. Basically, we have to draw accounts in the book of ledger. So we have to record transactions based on a double entry principles you might have studied, asset increase, debit, asset decrease, credit, all that. So I'll be discussing these things the future videos. So this is all for the time being. That is all for the time being. So we'll see in the next video.